Oh, that's new. Hey everyone, thanks for joining in on time. So, hi Ida, and oops, let's see. Yep, let me change this. Okay, sorry, I didn't use this feature properly. I couldn't see everyone before. All right, good, 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 good. Hey everyone, so let's kickstart then. So, welcome to also like this is probably I want to do the last webinar for us to for public. So, but well, let's get into it then. The first, I'll always start with that disclaimer. So basically, I'm not a financial advisor. So all the content that prepared in here is not considering your personal objective or also like financial situation. So all the presentation here, all the content is prepared more like general education purposes. And of course, like some result that we show is due to certain strategy that very specific on our Total Investor Academy. And of course, that all the information that we provide, it's if you're taking the action, is indirectly, basically, you are fully responsible for all the action that you've taken based on from this presentation. All right. Alrighty. So I always love to start with what we call like a market updates. So as everyone hear that, I think in the past, also like since our last webinar in the past few weeks, there's a lot of noise, right? A lot of news that market is down, market is crash, but it's more on also like that's media, right? Media, but also like money. Their job is comes from creating the news, right? So if they don't have anything to show or don't have anything to post, they might lose the job, right? So the not disregard their role, but media, one thing media do is sharing the news, whether it's good or bad. So they always come up with news. So always put the story of anything, right? But if we, I think for us as we invest, I think we are already been to investing for a while. I think for many people in here that I know, it's been investing for a while, right? If we look the chart, I mean, like we don't want to just take other people for just listen to them and just do the action, right? It's all about our due diligence. So if you look the S&P 500, this is the S&P 500 charts, right? If you see that this is like literally from May 2020, and I know that there's a little bit choppy here and there, but if you look at them, this is almost like the straight line, right? So it's pretty smooth ride from outside like from that coffee time to the now at the all-time high. So sound like we still going to see I would say like more upside coming up. I'll share why I said that in very very soon, right? So if you look into this quickly, right? So this S&P 500 year to date is already performed more than 14%, right? So this is like really, really good. So if you think about it, I mean like in 15 years average, so S&P always perform roughly around 10%. So this is like way above that. And this is also like we are halfway through of the year and S&P is already perform more than 10%. This is really, really good return, especially if you, let's say you invest earlier in the year and let's say you're late of the COVID, it doesn't matter, right? If you put your money in January or December, your portfolio should up like roughly around this if you just keep it simple, right? So if we're looking for, I think a lot of people always love technology and it's all about news and hype out there. So if you look in terms of this index called QQQ, these are all the index tracking all the Nasdaq or like top 100 technology companies, right? QQQ pretty much quite similar, right? They are more choppier than S&P 500, but overall since May to now, they are considered like a going almost quite straight line, right? It's pretty good, and they are performing roughly around that 10%. So overall, in terms of the market, they are still like performing really good in terms of that performance. They are not like news saying like they are in the negative or anything. So they are really good in terms of like they are positive more than 10%. They are in terms of the performance wise. I'll say like they are on track in terms of their average return, and I'll say probably like it will get a lot more. But something that I want to share a little bit, this is probably something quite new. This is what I call what we call like a ratio chart. So this is what it's doing. It's like it's the comparison between QQQ and S&P 500. What it does is, if I'll just explain briefly, right? Think about if you buy QQQ or compare, like, so if you buy QQQ and rather than buying the S&P, so you buy QQQ, not buying S&P 100, right? So what happening overall from like this 2021? Yes, I think in the early of the year you are performing, looks really good, but in the, I was like, since that February until now, you are actually underperform S&P 500, as you can tell, right? uh, S&P 500 is perform 14%, QQQ perform like 10% year to date. So you are indirectly underperform with the market. But if we look at this, I quite a big believer in terms of the mean reversion and stock that about to bounce. So if we put combine this ratio into what we call our timing system, they are actually very close into that our the first criteria, right? And they are actually, when I remember, like in the last webinar I did mention, hey, this is going to bounce, right? It's a good time to buy more technology sectors. So I still believe that we are still a lot of upside in the technology sector. So there's a lot of area that you can invest into as well. All right. So that mostly QQQ and against S&P. So I still, from the overall trend, looks like the market still have a lot of upside in terms of the technology sector, and not many technology sector are going up yet, right? So there's some of them still year to date still negative. So I will say like there's those company one that you want to look for, right? So in terms of the earnings, so is also I consider is wrap up of that 2021 Q1 earnings. A lot of people concerned with the earning as because of the since COVID, people say, hey, we're not gonna perform, we're not gonna growing. I think it's all because of it's more like the hype of the market. But we want to be very, very objective, right? We want to look at the data. I think that's the most important. If we look this is just the data from the fact set. So this the data is based on the summary of that 2021 Q1 earnings. So what it's saying is like 80% of the company, like in S&P 500, right? I'm not sure how much the numbers are, pretty much like more than 300 companies, right? So they are actually reported more, the EPS, like the earning per share, they actually above what the people estimated, right? So by looking at this, this is considered one of the highest, right? This is one of the highest percentage since this factor tracking that this metric. So by saying that the company actually performed a lot better than what people are expecting. So that's very important. So by saying that, that means the market sentiment, the people out there, or like even analysts, they're not seeing the market would like the stock market or even like the company will perform better in the long run. But based on the data, the earnings is amazing. Like they are beating what people estimate, and I know that's what happened in the past. That's already done, which is in the Q1. But if we look in terms of the next one, right? This is probably not the key takeaway that I want to look for. So I want to look into this like 15 guidance, right? When when the company not confident with their performance or not confident with the also like the stock itself or like the market, what they're doing, they're not gonna give what we call like a positive guidance. They're not gonna give a guidance at all, right? So what it's saying based on those Q1, there are already 59 companies giving us a very positive EPS guidance. That will be EPS guidance means like that's for coming quarter. So there are confidence like, hey, next quarter we are going to perform a lot better. So this is the positive guidance. So positive guidance means whatever we promised before or projected is actually we are doing better. So if we're looking at that, so the company itself, there's a lot of company having a very positive and confidence with this EPS guidance. And if we're talking about, if you're looking the previous earnings or even like I don't have the picture here, there's a 300, almost 200 something company, almost close to 300 companies. They are talking about inflation, right? So this is a topic that we discussed last webinar. they the company itself, a lot of company, they are consider inflation, they are considering the new taxation that is been increased by Biden, and of course, like they already consider all of them. So what I was saying is like they are already priced in terms of the cost of inflation, the cost of that tax. So there are still a lot of companies still confident for in their future, right? So that's very important, right? So that's overall for looking the current market and looking for what's coming up. I feel like the market still having a lot of upside, especially like in technology sectors. Looks like about a lot of those companies about to bounce. I think we have a lot of company that we are discussing in the past webinars, right? Like a solar company, like EV sectors, right? And this we're talking about like in terms of the technology as well. I briefly mentioned about Baba. We briefly mentioned about the Facebook. There's some of like big companies out there that still not performing as we expected. Also, like there's a lot of upside in here, right? Cool. So that's if you like I said, if you have any question, we'll still do the same format, right? If you have any question, feel free to type in the chat and you can ask me later on as well, right? So I have a strong positive outlook in terms of the stock market in the future. Company doing well, earnings expected earnings is amazing, and there's a lot of positive EPS guidance coming up as well. All right. So if we and of course like this is almost like end of quarter, so I'm just gonna use this opportunity to look in terms of my portfolio, right? As you aware, like I rarely check my portfolio or rarely check in log into the interactive brokers. So briefly I checked this and it's just sharing. This is the current performance like one of our portfolio, right? This is year to date, which is like 16.53%. And I just give a quickly this is I add this like green line represent the S&P 500. So overall, if you see like my portfolio has been very choppy, right? Up and down, up and down, up and down, and they are not performing as big as I expected. So I do have my insight and why it's happening. So I'll probably share that later on as well. Cool. So the other portfolio is our portfolio is returning right roughly like 31%. Right. So if you look into this, I think overall like in average we are roughly performing roughly around like 24-28%. So pretty much in terms of overall portfolio is quite good. I think we still perform better than overall market, which is a good thing, right? And I think the positive side is we are looking for at least we are have a positive numbers in terms of our portfolio return. And I think that's the most important thing, right? The managing your risk and of course try to get the high return. Oh, and I want to share one thing. So this is a cool feature that from the interactive broker they are, but this is a new layout that they're doing the portfolio analysis. So they are having a new one which is called portfolio checkup. I'm gonna show you quickly. So check this out, right? So this is called like portfolio checkup. If you click that portfolio in that there's a if you go to your interactive brokers, there's a once you check your portfolio analysis, there's a call like portfolio checkup. Once you click that, it will give you this a nice breakdown, right? So there's no more Excel, there's nothing no more, right? So you can tell like how much your geographic distribution, how much your sector distribution, and it will tell you how much weighting percentage in your portfolio, right? So this is one of the portfolio that we got, right? So this is like giving like, hey, we invest in Europe, we invest in that Asia market, even like in Oceania, which is Australia, and yeah, and the we invest into technology sector as well, right? And oops, yep. So in terms of like if you're looking, oops, if you go back to here, right? If you're looking in terms of this particular portfolio, right? What we looking for in terms of this is more on what we notice when we analyze the portfolio is more on we have a lot of weighting into the stock like Nvidia and Square, right? Those are the stock that hasn't been performing really well. As you can tell, like the other position is actually doing a heavy lift and helping the portfolio still up. But once the Nvidia and Square start performing, and we are having a very high confidence that the return will be a lot higher. Cool. Alrighty. Moving forward, let's go to the next topic. So I'm just gonna share about the Jinko Solar, right? So this is the stock that we share also like around that February 2021. We share that. It's like, hey, it's a good opportunity to one of the students do the presentation about the company, also like the more like the whole industry. So one of the stock that I picked, which is called Jinko Solar, and I'm gonna show you guys when the stock's not working, right? So I'm a big believer in not just sharing to you guys like what's working. To be honest, like if in the bull run, in the when the market is doing well, everyone's gonna make money. Anything that you touch make money, right? So this is important, the technique or like strategy, the mindset, how you handle when the portfolio going down, right? So this is a Jinko Solar. So one of the company that we entered February. So I did sharing, hey, what's the opportunity during that time? I'm doing like sell put at that time, right, which is our money maker cash flow trade. Then I'm just gonna share this quickly. So all the purple line, this is all that option expiry, and we are around that June expiry, right? So I'm gonna share how a trade looks like. So if guys just looking at this, we are looking like we are making quite a lot of like also like a lot of losses. But I'm gonna show our trades and how it looks like. So the first trade that we did, this is one of the fair scenario, which is we got like few different portfolio, and I'll show how it looks like. So the first one, which is the way we do it, which is we sell like 50 put. So we promise we're selling that insurance at $50, right? And we are going to buy the shares at $50. And apparently the share is really going down and a lot of down lower, right? So what happening is we got exercise at a 50 put, so which is okay, right? That means we got the shares at a $50. All right. So when we did that, we received $3 per share, which is roughly around $300. So I'm gonna show you the trade log, so how it looks like. So the next one we do sell April, which is call options. Talking about the call options, we did cover this strategy rough. I believe that's on March webinar. So I believe that's recorded. You guys can go back and check into our Facebook group. So I did briefly talking about, hey, this is one of the way for you to generate a cash flow. So you can do the 50 call. So what happening during that time is expired. I keep all the cash. So moving forward. So I did sell another like 50 call, which is May. What happened again on that one is expired, and that's nice, right? Oh, I'll keep all the cash. And after that, I sell another one, which is this June, expiring in June, and a 50 call. This is all right. So I received not much, right? 15 cents, which is like $15. And the current share price roughly around $40.30, right? And that means we still going to be what we call like expired again, right? So if we're looking the next action, right, we still be able to sell that one contract 16 July, which is like 50 call. You should receive roughly around $1.20. So I think the current price roughly around 1.4. Well, I just put it down 1.2. So make it easier when roughly when it's expired. And on Monday, you should be able to sell around this price. So trying to be conservative, that means if you're looking at this based on this trade law, so oops, too fast. Our total return will be, we got $300 the first one, we got this the first one, we got $350, we got $65, we got $15, and of course, at the next rate, roughly around which is $120, right? So it will give us a total return around like $850, right? So just a quickly, right? So all this when you do the cash flow trade, remember everything is like times 100, because in the US market, one option contract equal to 100 shares. So times 100, 300, times 100, 350, right? So we got a total return is 850. We're looking against what we call like ROI. So this is ROI, the way we calculate how much we get against how much the capital that we have. This, which is investment, which is around like $5,000. 850 divided by $5,000. At the moment, your return just for this trade, you still making 17% return in 4.5 months, right? So it's like a pretty good return. So it doesn't look like, if you look the chart, let me scroll that quickly. Oops. If you look at the charts, you're entering roughly around here, right? It does performing right, looks really bad, but the way we manage it at that trade, which is amazingly, we be able to return 17%. I'm gonna share another scenario which is I share in that March webinar. So where you do what we call like a dollar cost average if you have a capital. So this is another one, another trade, another variant, which is if you got extra capital. So this is when we start the same time, same thing. We sell like one $50 put. You got exercise. So what happening is, oops, oh that's wrong. So let me explain a little bit. So we're going to sell like $50 call, and after that we're going to sell like $40 put. All right. So when at that time that put is got exercise again. Let me let me clear that up. This is put, yeah. So we got exercise. Then that means we're going to buy the shares at a $40. So remember, like when you buy $40, you buy $50. So you have like 200 shares, and 200 shares, and your average price when you buy it is like $45. Cool. All right. So after that, oh, hold on. Someone asking. Ida asking, could you just roll the put to the next expiry instead of being exercised? Ida, you can. Quick answer, you can, and but not something that I'll probably just share in this public webinar. So you definitely can roll your put to the next expiry instead of being exercised. But I'm gonna share why I prefer the other way around. All right, so moving forward, so the next one, so the next trade, what you're going to do is you're gonna sell two contracts because remember you have 200 shares. You're gonna sell two contracts, which is $45 call. So you're gonna get roughly 1.20. It's gonna expire June as well. Is currently is $40.30. It's gonna be expired, right? The next action it's similar, right? You're gonna sell to contract roughly around $2.10. So the total return for this one, the first one is definitely 300 because it's only one contract. The second one, which is 350, which is one contract, 300, which is one contract. $240 is coming from $1.20 times two, so $240. So I did all this calculation. Roughly you receive like 1660. This giving you total return roughly around 18%, 45 18.45%. All right. So if you look at this, the total capital is actually increased because remember you buy like $50 put, you got a $40 put. Now you got like you already spent like $5,000 to buy the shares, and after that you spend another $4,000 to buy the shares. All right. So total capital that you injected for this $9,000. All right. So there's a two-way to manage this, I'll say like trades, right? But if you see the return, it's pretty much very quite similar, right? It's not like huge different. I know like it's 1.4 plus 5% extra, but it's not huge different. But of course, like the most important thing is not uh it's not about how much return that you're gonna get, right? It's all about how you able to manage your trades. So I think just to give a summary, right? If you we have a two variants, right? You see like when one which is you don't have capital, you keep going to do what you have original capital, and the second which is the low cost average where you have when you have extra capital that you can buy you can sell another put lower level. So when by saying that doesn't matter how much capital that you have, right? You still be able to get a good return in your portfolio, right? And like I say, all about managing your risk. It's not about managing your return, right? By you be able to manage your risk and your emotional statement, then you should be able. The return itself is just a byproduct. It just come by itself, yeah. And like I mentioned, like you need to know what to do when things doesn't go in your favor, right? I think that's the most important. Is like I said before, if anything that goes up, anything that like when the market is doing really really well, like always going up, anything that you touch tendency will always make money, all right? But it's important to know like how you manage your position, all right? So those strategy like combination selling put when you got exercise and after that you selling call, that strategy called the wheel strategy. So this is very popular strategy that has been talking everywhere. Not the strategy that I have in my work portfolio, but I'm just gonna giving that strategy characteristic, right? The pros of this strategy definitely is really good strategy if you have a income portfolio, something that you can add into your income portfolio. And last, like I mentioned, is predictable. You can know, you can get generate that consistent cash flow. You know like how much you're gonna get upfront. Um, we I always make it also like very conservative. I always target average like 2% per month. But as you can see, we've been generating a lot more than that, right? So I always have a very conservative numbers to have a target, right? So it's predictable, it's consistent cash flow. This is something, one of the strategy that I have in my income portfolio, right? But cons side, this is something that's important. Any strategy, there's a pro and cons, something that you need to be aware when you pick the strategy, right? Um, let's say this is something that you need to do it regularly, almost every single month. Depends on when you're gonna pick the expiry. So this is something that you need to do regularly. And by saying that, that means you not be able to owning the assets, right? When you're not owning the asset, that means you always need to do the work. When you need to do the work, then you'll be able to generate that cash flow. And the last thing is, because you don't never own the asset, you're gonna miss out that huge growth of gain, right? When you sell that call option, like we did mention in the previous webinar, when you sell the call, you have obligation to sell the shares away, right? So if that goes through that strike price, so by doing that, you are creating a limit or cap into your gain. So that's the also like not a good way if your goal is to have a growing your portfolio. Cool. So if your portfolio purely just, hey, I have a lot of cash, I have a lot of money, just want to get an income, right? This is the cool strategy to have. Okay. All right, just giving a quick flow chart of this, right? Something you can take screenshot later on. The wheel strategy, you can do this, right? So first you can sell put. After sell put, let's say it's expired, you will get what we call exercise. And when you get exercise, that means uh, if you gonna buy the shares, right? Let's say if you're not getting exercise, then you just need to do it again, right? You just sell put again, right? So let's say if you got exercise, let's say yes exercise, that means you are going automatically buy the shares, buy 100 shares, let's say one contract, right? After you buy 100 shares, the next action that you can do, which is like you sell call options, all right? So I always tell people, when you sell a call option, make sure that you pick the strike price at the price when you bought the shares, right? So just giving example, let's say you sell the put at $50 and you bought the share at $50, right? Don't sell the call option at $40 or like $30. Sell back at that $50. Make sense? So if moving forward, if let's say go to that expired, it will go to that exercise motion. So if you don't get exercise, that means it's the share price doesn't go through that call strike, then you just keep doing that, sell call again, which is what I did with that Jinko Solar, right? If you got exercise, that means the share price is above that the call strike. You gonna have obligation to sell that shares away. That means you gonna sell that shares, you lose that shares, you're gonna have your cash back, right? And what you can do next, do it again, sell put again, right? So that's what like people call this is the wheel strategy. I know it's not like a wheel because my arrow is like square, but you know the gist of it. So it's all creating that cycle. All right. So feel free to take screenshot on that one. So if not, you can just Google it. There's a lot of people sharing that information. The most important that I want to share, this is this important rule that I need everyone to know, right? When you do this strategy, you please do that strategy on the stock that you're willing to own, right? So this funny story, I got student, right? So like, oh, he one of the stock that he's doing, which is Neo, right? And so like, oh, it keeps going up, and it looks like really high. I want to do it, right? It's good cash flow, and the ROI is like 8% or 9%. I was like, but it's too risky. I did mention that, and he did it, right? And he got sell put at $90, and once and actually Neo dropped like a lot. And the next thing is he mentioned to me, oh my god, I don't want to own the shares at that price. I want to own the share at $45. So The key learning from that is remember always sell the put when you start that on the share, like on the stock that you're willing to own at the price that you're willing to buy the shares. Right? And the most important is I'm coming from also like value investing mindset. I was looking for the company that have a good quality, and great quality company is very important, especially when you do this kind of strategy, right? The last, which is never ever do it when there's earnings before the expiry, or even like also like close to expiry. Cool. So for this is like I did mention briefly before, when you sell call option, you must pick the strike at least at the board strike price. All right, don't sell at lower than that. You can sell higher than that, which is okay, but don't sell lower than what you bought. Um, you know, this is something. This sell call is not part of our wealth portfolio. Like I did mention our wealth portfolio goal is to have a growth and to make the portfolio sustainable. And this is not part of our sell call. Not part of our wealth portfolio. And this strategy is really good for also like income portfolio, right? All right. So any questions so far with that the whole wheel strategy or whatever that Jinko Solar trades? Hmm. All right. So moving on. So I'm gonna share also like the also like the next one, which is the cash flow trade. So the the next cash flow trade that I'm looking for at the moment, which is this company. I think everyone knows this, iRobot. I believe everyone knows this, right? So this is iRobot, which is they're doing vacuum automatic robot. So like robot vacuum. Just a do a quick brief, right? So iRobot pretty much is considered like a global leader, and in terms of that, especially in terms of their robot vacuum, and the cool thing with them, they start incorporate with the AI technology and pretty much machine learning stuff. So the robot vacuum is become smarter and smarter, right? So didn't expect robot vacuum getting smarter. And of course, the other things, they are growing not just in the robot vacuum, they are growing their portfolio in terms of the other product and other category. So there's a news that I saw before they start they sell the license of the technology into more like the robotic into the space exploration. So there's a also like they are growing the company not just into the vacuum, and of course they are considered one of the leader in this. If you see these whatever that numbers, they are still considered like the market leader. They're still covering in here. Let's say they are actually dropping that market shares, but overall they are still close to 50% capturing, especially around the all this robot vacuum. They are considered a leader in this industry. So if you look in terms of their EPS and revenue, right? So remember, like one of the cash flow trade criteria is make sure that EPS is positive. They are positive. They are growing, which is really good. If we look the valuation, in terms of the growth valuation, it looks still cheap. So based on our calculation, roughly the projection, which is the fair price, roughly around $100. So in terms of the current price, it's still like below the 100. So I feel that they are still very considered undervalued in terms of that growth valuation. So if you look in the chart briefly, right? So they are been up and down, and this is like huge drop during that COVID time. And after that, they are going back up, and especially around here, and they are been retraced back a little bit, and they are bit also like start trading around the support level, right? So the numbers that I picked, which is like $90, this is where I'm gonna sell the put for this company. So just give a quick trade, these like details. So I'm gonna sell put for the sell put for the iRobot. So the required capital, remember, like this is like always times 100. That means like $9,000, 90 strike times 100, which is $9,000. So you're gonna get return roughly like $300, right? So that's giving you return like more than like 2%, which is 3.33%. Cool, all good. Okay. So also like pretty much that's it for the webinar. A very short one, and also like I'll put everything more on like actionable item that you can do, and especially the wheel strategy. That's something that you can do if you just looking for pure income. If not, always come back to the basic, which is selling put. Have the intention to actually owning the shares, right? Cool. The update. I'll select the last update and final update. So, like I said, this is the last webinar for public. This is recorded. I'm gonna upload that later on into the Facebook group. So this is the last webinar for public, and the last next webinar that we are going to do is going to be exclusively for our students. And what's gonna be in there, right? I think for all students here. So we're gonna be more like actionable strategy, and the other thing is more like I'm gonna do more like in-depth stock analysis. So the other things that we looking for is to do the portfolio review, and of course doing that portfolio review, normally I got message like one-on-one doing portfolio review. So I'm gonna do this more like as a group. So I'm gonna get that someone's portfolio, someone that volunteer to give their portfolio to be reviewed, and of course it's gonna be anonymous. And I'm gonna do review. I'm gonna share that my how I'm gonna manage that portfolio, or how what the next action for that portfolio, so other students can learn that as well, right? And one of the reasons this will are focusing more on the students now is more on the, I would say, content itself, right? I think the tricky part for me in the previous month is more like there's a lot of things that I'm struggle to share to the public because of the lot of strategy that we got, that also like this, always there's an advanced strategy that we can do for certain market condition. So I prefer to be able to have also like a very specific topic on certain market condition, and share that to the students, right? And the goal is to give more values to the existing students, and of course the everyone's success in the community, which is our graduates, which is student, is very important to me. I'm going to take care of you. I want to see your good result as well, and of course always reach out, right? And the other last, probably the last thing. So I'm trying to organize a students gathering, mostly in July. So if in all the students, if you listen to a replay, if you have a good recommendation place near your area or nearby that can capture like a big group, and of course like either pay or like free, let me know. So something that I'm looking for and something that we can organize. And of course we're gonna do a quick sharing here and there as well, right? And for people that are not student or even students, I say like please invite people to our Facebook group. Any people that you feel like, or friends or family that you feel like going to get benefit from investing, bring them in, right? So bring them to the community. So I'll try to do more sharing here and there, and of course, like we'll encourage students to share in the group as well. So at least you can, people can learn that, even though let's say if they don't have a capital to learn from us, then at least they can learn from some of your experience. All right. So last but not least, if you have any question, let's say like you can ask me anything. I'm just gonna open the floor. I'll select open for 10 minutes. If you have anything, feel free to ask me. You can unmute yourself, or you can type in the chat. All right. Brings. Thanks, Ida. Thank you for joining. Always joining live every single month, which is awesome. I hope you got a lot of benefits from those webinars. Hmm. Thanks, Harris. Thanks, Julius. Thank you as well. You're welcome, everyone. You're welcome, Crystal, Fiona. Hmm. Okay. Mm-hmm. So I think we got food now. Oh, hi, Finn. Haven't seen you for a long time. So thank you for joining in. All right. I feel like there's no question. Good. So if you have a question, feel free to reach out or ask in the group, and we'll try to reply as fast as we can, right? So see you on the weekend. Yeah, see you on the basketball court, yeah. All right, thanks everyone. Have a good night, and of course, we'll see more things in the also like in the Facebook group. See you guys around. Ciao, bye.